I would think that it's going to be back to more a Cold War situation where the threats are there, but they're not deliberately exercised. We're short commodities. I think that they've gotten way overdone. Copper is now hitting prices that I think are just unsustainable. To bring price earnings ratios on the S&P 500 back to their traditional level, you'd have to have over a 50% decline in the S&P 500 today.
I'm very pleased to be joined once more by Gary Shilling, president of Gary Shilling Co, renowned economist, investment advisor, and author of the monthly Insight newsletter covering economic trends and investment strategies. He set up the Merrill Lynch economics department and has worked on Wall Street for many decades. It's an honor to always host you again once more. Gary, welcome back to the show. Good to see you.
Glad to be back. Thank you.
The big news over the weekend, of course, is news coming out of Venezuela. Venezuela's President Maduro has been captured by U.S. forces amidst allegations of drug terrorism. So we're going to see what's happening now going forward. It's still an ongoing development. We're speaking today on the 5th of January, right after the holidays, and stocks are up. Bitcoin is up, gold is up. And so it doesn't look like investments, or investors at least, are considering this particular development as bad for markets or risky for the market overall. But when you've had a long storied career in Wall Street, you've seen a lot of wars break out, a lot of conflicts in geopolitical hotspots. Generally speaking, when you have a hot war or a kinetic engagement, or in this case, an actual decapitation of an entire nation state, how do you react as an investor? What are the questions you ask yourself first and foremost before making any changes to your portfolio if necessary?
You have to be very careful about initial reactions because oftentimes they're wrong. And in this case, of course, it looks like it was a very well executed, smooth grabbing of this guy and his wife and getting him out of Venezuela. We're now seeing pictures on TV of their being brought to New York, and of course they pled not guilty to all the charges and so on and so forth. But the real question is, what does this do to Trump's power? Not only just nailing this guy, but in terms of his power in financial markets and elsewhere, and it certainly looks like it's going to enhance his reputation and power, because they obviously nailed a bad guy and got him out of the country, no problem. He and his wife couldn't get into this room that supposedly had more locks and bolts than Fort Knox, and they somehow bundled the job and didn't get in there. But this is, you can't make this stuff up. I mean, this is really amazing. This is the guys in Hollywood can't improve on this stuff.
Yeah, but I don't think it's done, Gary. Look, take a listen to what President Trump had to say immediately after the events in Venezuela. Take a listen to this press conference here.
A very sick neighbor. It's not a neighbor, but it's close to a neighbor. And that's Venezuela. It's very sick. Colombia is very sick, too, run by a sick man who likes making cocaine and selling it to the United States. And he's not going to be doing it very long, let me tell you. He's not doing it very long. He has cocaine mills and cocaine factories. He's not going to be doing it very long.
So there will be an operation by the U.S. and
it sounds good to me. Yeah. You know why? Because they kill a lot of people. Cuba is ready to fall. Yes. Cuba looks like it's ready to fall. I don't know if they're going to hold out. But Cuba now has no income.
Okay, I'll stop it right here. An operation in Colombia sounds good to me, he says. And he also made similar threats for the entire region. And by the way, he talked about taking over Denmark. Denmark's Greenland again. Not Denmark, but Greenland. So this guy's on a roll. Gary, what do you make of these statements? What's your reaction to these remarks?
Well, let me just add, before we move on, let me just add one comment here that nowhere have I seen in the media, and that is, of all these drugs, they're sellers and they're buyers. And we know who the sellers are, sure. But how about the buyers? The buyers are Americans. And are these people faultless? No. I mean, they're clearly buying illegal drugs that are very harmful to themselves, their families, everybody else. And there doesn't seem to be any repercussions for the buyers. It's simply the sellers. And I find that very, very disturbing because you remember, I think it was Nancy Reagan was when it came to drugs, her motto was just say no, just say no. And that was from the buyer standpoint, but there doesn't seem to be any of that. It's the sellers who are at fault. Well, you and I aren't going to change that, but I think it is something that we need to note, and that there are buyers as well as sellers. If you move on to other areas that you mentioned, Greenland, etc., that's a pretty touchy situation, because Denmark, which basically owns Greenland, is a member of NATO and a very staunch ally. And obviously, Greenland is it's a very big island. I think it's the largest island in the world, independent island. I remember reading an account of some guys who spent 2 years literally sailing around Greenland a century ago, and they got marooned for literally a year. I mean, the kind of hardships are hard to imagine. But in any event, the whole question is Greenland does have minerals and so on, but it also is right on top of Russia, and China wants into the action up in that area in the Arctic. So it's really opened a lot of questions, and whether Trump is serious about trying to take over Greenland or not is hard to say. Now he has said, as you're well aware, that they have no intentions of taking over Venezuela. They really want to get Venezuela back in sort of the normal league fraternity of nations. But you would certainly hope that there's no intentions of taking over other countries here. That has never been a very good idea. But Trump obviously is feeling tremendous power right now in having succeeded so dramatically in the case of Venezuela. And this is a man of immense ego. And whether he is going to stop right there and say, okay, we got the bad guy, he's out of business, we're going to try to get Venezuela back as a more normal country, that remains to be seen.
Gary, how interested are you right now in defense stocks, given the recent developments we've talked about? Well,
the initial reaction was that it's beneficial for defense stocks, but
Lockheed, for example, is up 7% since the 2nd of January. But anyway, please continue.
I'm not sure I see the logic of that. I mean, if this really says that the U.S. has gained a lot more respect and power internationally, and particularly in the military area, I would think that would. I don't see why that is beneficial for defense stocks, unless the assumption is that Russia and China are going to intervene here and counter the U.S., and we get another Cold War. But just on the surface, it looks like the U.S. has asserted its power, and I'm not sure that there's any real challenge to that.
Before we continue with the video, let's talk about today's sponsor, Monetary Metals. You already know why people hold gold, because it's real money. But what if your gold could do more than just sit in a vault? Well, that's where Monetary Metals comes in. They offer a way for you to earn a yield on your gold paid in physical gold. Through their leasing marketplace, you can earn up to 4% yield per year in gold. Instead of paying storage fees, your gold works for you. And because that yield is paid in gold, not cash, your stack grows no matter what the dollar does. Thousands of clients already earn a monthly yield in gold through Monetary Metals, so don't just hold it, put it to work. Go to monetary-metals.com/Lynn, link down below, or scan the QR code here to learn more and start earning real gold on your gold today. Take a look at the CBC article. The headline is, after seizing Maduro, Trump wants Venezuela's oil. He will face logistical and legal hurdles. I'll let you comment on whether or not that's actually his objective. First paragraph of the article says, U.S. President Donald Trump's plan to take over Venezuela's oil industry and ask American companies to revitalize it after capturing leader Maduro in a raid is likely to face many hurdles logistically, legally, and politically. Do you think that the oil sector in Venezuela is A, about to be taken over by American forces, and B, whether or not this will have any significant impact on the oil markets themselves?
Well, yeah, this whole idea of international relations, it really boils down to who's got the power politically and particularly militarily. And these things may get validated by courts, but in actual fact, it's a power struggle, and the U.S. now, I think, is reasserting its power under Trump. And I don't think that particularly China wants to get involved in any big mix-ups on that one. And Russia, Russia is really a third world country. They have limited economic resources and beyond oil, and there's plenty of oil right now in the world. So I'm not sure that this really is. I think it does give the U.S. more power internationally, and unless there is a military accident, I would think that it's going to be back to more a Cold War situation where the threats are there, but they're not deliberately exercised.
Besides this conflict in South America and potentially what Trump may do to neighboring countries, it's a developing story. We'll keep tabs on whether or not he takes action against Colombia. So far, no action yet. What other forces, macroeconomic forces that is, are you watching to change your investment stance in 2026? Well,
first of all, you got to remember that the media, and our conversation right now is part of that, of course. The media always wants to have something to say. You're not going to get on the air and say, "Well, I think we're going to have 15 minutes of silence here because there isn't really anything worth saying." And I'm not going to leave blank pages in my monthly newsletter just because I say there's nothing really worth writing about. Oh no, there's always something. So the challenge for people like you and me is to separate what is important and what potentially is going to be important in the future from the chaff, the filler, the kind of thing. I find it amazing. If you look, and I'm an avid reader of the financial press, particularly the Wall Street Journal, and if you just look at those day by day editions around Christmas, New Year, holidays, you find an awful lot of just filler. I mean, it's repeats, it's rehashes, it's elaborations. It may be interesting recreational reading, but it isn't going to make a lot of difference to your knowledge of what's going on in the world. And I think you have to keep that in mind. But with that as background, what are the real threats here? I think that right now, assuming you don't get some kind of a blow up reaction to Trump's assertions on the international stage, I don't think there's really a lot of threats. U.S. is now back in the driver's seat internationally, and I think the rest of the world recognizes that. So I don't think there's an awful lot to get excited about in that area.
Well, let's take a look at what you wrote.
Sorry about that.
Absolutely not. We appreciate your candor. There doesn't have to be anything dramatic to happen for us investors to position ourselves accurately. Let's just take a look at what you wrote recently. Are recessions obsolete? The economy has struggled to gain momentum in a number of areas, as we'll look at later. The strong stock market, the only bright spot, truly, until very recently, has been the stock market, with the S&P 500 index. Why do you think the stock market is still in 2026 disconnected from what many may believe may be a weakening economy?
Yeah. Well, the stock market does lead the economy historically, but it's never a one-to-one sort of relationship. And at the moment, I just don't think that the economy has the kind of look in the future that would give you a clear idea right now that you could read from the stock market. Again, it's some wag said that stock market has predicted 23 of the last 5 recessions or some such number. But at the moment, I just don't think that there's a lot of predictive value in what's going on in the stock market. The stock market is very expensive, no question about that. You've had an awful lot of interest in speculative areas, Bitcoin, cryptocurrencies, and so on and so forth. And I think a lot of it is because there's been a tremendous amount of money created. You look at all the debt of the U.S. federal government and other governments and the private sectors. I mean, the flip side of that debt is a creation of assets. And where are those assets going? Well, a lot of them are going into speculative areas. And so people decide that, cryptocurrencies are hot, so everybody rushes into cryptocurrencies. And of course, the convictions, the rationales follow the actions. You get the actions in markets, and then you get the rationales as to why they have occurred. So theory follows fact. You get the fact of a rising stock market, and you always have to have a theory as to why it's justified. That just follows as the night today. So I think that's what's going on here. And so I think there's a lot of ex post rationale going on to justify stocks at very, very high levels. You look at one measure that we always follow. I report on it almost every month in our monthly newsletter, Insight. It's the measure of stocks on a trailing basis. And if you look at this in terms of the price earnings ratios, to bring price earnings ratios on the S&P 500 back to their traditional level, you'd have to have over a 50% decline in the S&P 500 today. It's very, very speculative. But again, you've had a lot of money floating around, a lot of debt, and a counterpart of that are the assets, and they're going into all these kinds of speculation. And of course, that tells you two things. One is that the money is available, is going to go somewhere. And also it tells you that there are not a lot of legitimate uses of that money. It isn't as though you're getting a big boom in capital spending or areas that promote the economy. It's really been, things like crypto and it's been speculative areas. And I think that ought to be of concern to people.
We've our team put together a table summarizing your views on certain assets and economic outcomes from last year to now. So last year in February, when I had you on the show, we were discussing the dollar. You were long the dollar. I believe you still are, according to your position in the last newsletter that you wrote. Treasuries long, copper short, no update for now. Gold, we'll talk about gold in just a minute. You were cautious equities last year. You're now expecting to, you wrote in your recent piece that when stock markets correct, they could do so in the order of 30 to 40%, which is something that you may not be surprised to see, you wrote. I'll just scroll it on to the very bottom. So it does seem like you're a little bit even more cautious now on the stock market than you were last year. Is there a particular reason for why you're more bearish now, it seems?
Well, if you've got an overpriced market and it goes up even more, then if you're logical, you ought to be more cautious. I mean, I don't know what else you can say about it. I mean, things are overdone, and they keep getting more overdone. The risks are greater on the downside.
Now, Gary, how would you allocate, let's say, a portfolio of $1 million?
Well, and you know, we do manage money, so I can tell you what we do use in our portfolio. We're long the dollar, you mentioned. We're short commodities. I think that they've gotten way overdone. Copper is now hitting prices that I think are just unsustainable. And copper is a very good measure of commodities because it's used in almost anything manufactured, whether it's plumbing facilities or cars or appliances or machinery. Copper is kind of the queen of commodities from a realistic standpoint. Also think that treasuries are attractive and have been and will continue to be. They're a safe haven, and with the prospects of the economy being weaker rather than stronger, treasuries have the added advantage that sooner or later the Fed is going to ease credit further, which is a help to treasuries. So those are the areas that we're principally involved in our portfolios.
Your newsletter warns that it would take maybe an 83% decline in the S&P 500 to return the Shilling PE to its historical average of 17, which highlights how overvalued stock markets are, to your earlier point. Let's talk about some real life triggers for any correction. It doesn't have to be 83%. It could just be 30 to 40, like we talked about. What would cause a correction this year, Gary?
If I really knew that, I wouldn't have to work for a living, would I?
Why?
I mean, you know, if you just look at historical patterns, corrections usually go beyond the bringing things back to long-term averages, just like speculations on the upside take them well beyond historical averages. So if you get a correction, if you get a really serious bear market, the downside is probably greater than what it would take to bring it back to the normal long-term averages. And it's that kind of thinking that leads me to believe that 30% correction decline in the S&P 500 is no big deal.
The fact that the FOMC is more dovish this year than last, would that make you more bullish as well? The old adage of, let's say, not fighting the Fed, would that apply this year, do you think, Gary?
I don't know that it is. I mean, the interpretation of the Fed is always interesting, and it's never clear what the Fed really intends. It's always everybody's interpretation of the Fed. But the Fed has obviously been concerned about the economy to the extent that they have been cutting interest rates, and there's every indication from the Fed that they will cut at least one more time this year. But I think unless the economy really falls apart, that we're not likely to see massive reductions in interest rates by the Fed. And bear in mind that the Fed operates on the overnight market, the very short term. Now, those effects spread throughout the yield curve, from the overnight rates, the Fed funds rate, all the way up to 30-year bonds, the longest issues by the Treasury. And it does set the tone for everything else. But the Fed doesn't come out and dictate what's the interest rates on 10-year Treasury notes, 30-year bonds, et cetera, et cetera. The Fed really is sort of given the guidance, and it's up to the markets to take it from there. But I think that we're in a situation now where it's generally believed, and the Fed is leaning this way, that the Fed sees lower interest rates ahead, a weaker economy, at least not as much strength, but the inflation issue is still a problem for the Fed. Their long-term target of 2% inflation, and that's they measure that by the by the consumption, personal consumption deflator, not the much more popular index of the consumer price index. But the Fed hasn't gotten there, and have they really given up there? Are they going to go from 2% to 3% and remove the goalposts to accommodate what's happened? We'll see. But I think the Fed's in a situation now where they don't want to be embarrassed by having to say, we put the stake in the ground at 2% and we haven't gotten there, so we're going to just abandon the whole thing. That risks credibility, and credibility is the one thing the Fed has to strive for, has to do its best to maintain.
Okay, let's talk about some commodities now, Gary, before we close out the conversation. So you wrote in your newsletter that global economic policy uncertainty and trade policy uncertainty indices reached sky-high levels at times last year. We suspect this uncertainty will be part of the storyline in 2026 as well. Importantly, commodities such as gold, silver, and copper are also strongly favored with a net 18% overweight. Is it still appropriate to be overweight commodities like gold and silver, with gold at almost $4,500 an ounce and silver touching not almost, but above $80 at some point last week?
Yeah. Well, I've always been agnostic on precious metals. They're pushed around by so many different forces, inflation fears, deflation, military actions, what the central banks are doing, et cetera. And I'll leave it to others to try to figure those out.
The major opportunities for investors, we've talked about some risks. We talked about downside risks, especially. Any particular opportunities for an expansion in valuations or just further momentum in the stock market, or any particular sectors that you think we should be overweighting? Bullish opportunities for 2026, what would they be?
Well, I'm biased on this, but Treasury bonds and those are the longer term issues, all the way out to 30-year maturities when they're issued. I'm still very much intrigued with those because I think that the economies of the world are in a deflationary mode. The growth prospects are not that strong. There's not a lot of imminent risk of economic collapse around the world, but there isn't any great source of strength. And if you look at what's happening globally with increased production in particularly Asia, you're in an excess supply world, and if you got more supply than demand, you got downward pressure on prices. So I'm very keen on treasuries as the ultimate measure of inflation on a global basis.
Well, final question for you, Gary. How's your beekeeping activity going on? Keep us updated.
Well, those bees are there. I'm glad you asked, but they're all tucked in for the winter. We'll see what happens. I won't give you too much more detail than you can really appreciate or want, I should say. But honeybees are all from the old world. There's lots of New World bees, wasps, yellow jackets, hornets, bumblebees, and they hibernate. But honeybees were brought here by the European settlers. The American Indians called them the white man's fly. They'd never seen them. They didn't exist in the New World until the European settlers got here. But they're different. They do not hibernate, and so they need to keep eating to keep warm in the winter, just like you and I do. So they need to have plenty of food to get through the winter, and that's pretty crucial about this time of the year, because if they were run out of food, they literally would starve. And that's the one thing that's most discouraging about beekeeping is starvation. So it's these are critical times. The queens are starting to lay next month and getting ready for the spring, and so beekeepers, and that's me and everybody else, are looking now. Unfortunately, the bees have had a rough time this past year, and nobody is quite sure why, but they've been dying off. Normally, normally I'll lose 20-30% of my hives over the winter, but this year it's more like 50 or 60%, and I'm not unfortunately far from unique in that. So you hope for spring, and it's one of these deals where you just hope that the bee gods shine on us, and we get lots of good weather and good conditions. But now is a critical period, the next couple of months.
Good. Gary, I asked you this because it's important. I'll give you a personal anecdote. When I was in university, I was at McGill, and one of my favorite professors, an actual investment manager, we took a class called Applied Investments where we had to manage the school's endowment money. And he said that to be a good investor, you have to have worldly knowledge, you have to have interests outside of finance, you have to learn things that you're passionate about. Is this something that you agree with just over your very long career as an investor? And generally speaking, how do we, as viewers of this program, as investors and finance enthusiasts, become better at learning about the world such that we can apply that knowledge to our investments?
Yeah, I think I think the one thing you have to realize is that we're going to have many different aspects of the economy, things that are important to investors, but you have to keep your eyes on the long-term situation. And I mentioned this earlier in our interview that if you look at what's going on, we're in basically a world of plenty supply. It's a deflationary kind of world. There's no great source of demand. It isn't like if you've got a very active war going on where there's plenty of demand for almost any goods and services. And so I think if you look at it from that standpoint, although that's a very broad brush view, and it doesn't tell you what to do day by day, but I think it says that if you look at things from that aspect, you basically realize that we're in a deflationary world, and the downward pressures on prices are generally global, and who benefits from that? Well, it benefits from treasuries, things that benefit from low inflation rates, particularly, and it is not beneficiary for commodities. Those are two very clear aspects of this.
Thank you very much, Gary. We appreciate your insights, and we'll look forward to more of your insights next time.
Okay.
Where can we follow your work?
Good to be with you.
Yeah, good to have you as always. Where can we follow your work, Gary? Where can we read your writing and your thoughts?
Well, people can follow us on our website, www.agaryshilling.com. We do have a newsletter, Insight, and if anyone would like a sample copy, they can contact us and we'll send them one, and they can look at it. And they want to subscribe, that'd be wonderful as far as we're concerned, and we hope it'd be beneficial to them. I think one thing I think people need to do, and this is what we try to do, is to look at the longer term real forces affecting the economy and security markets, and forget don't get overwhelmed by the short term chaff, the things that for example, if you would look at, if we went back a few days ago and said that U.S. was going to basically invade Venezuela, what would you say is going to happen to the oil price? Well, you'd probably say it's going to go up. No.
That's an interesting question. What happens if you invade a country with the world's largest oil reserves? Does the price go up or down?
Yeah. You got to look beneath that. And Venezuela's got huge oil reserves, and there's already surplus oil, and there's a lot of other factors. So you got to be very careful about responding to the knee-jerk kind of things of the moment. And that's what I've always tried to do. I think if I've been added anything to investors' help over the years, decades, it's having a perspective on what's happening and how it fits into the global situation. And that's what I do. And if people think I'm doing a good job, well, may want to subscribe to our services or ask about our money management or other aspects of our business. But I think for people without a lot of careful thought and experience plunging in to security markets can be very risky.
Final question, since you brought it up. 1 or 2 mistakes you made early in your career as an economist, maybe even from your Merrill Lynch days or more after that.
Well, biggest mistake of Merrill Lynch was I forecast a recession for 1969-70, and it did occur. But in the Merrill Lynch parlance, it wasn't being bullish on America. So Donald Reagan, who later was chief of staff of the White House and secretary of the Treasury, he was the head of Merrill Lynch. He fired me because of that forecast, basically. I went to another firm, White Weld, and not knowing 4 years later that Merrill Lynch would buy White Weld. So the story on Wall Street, which is literally true, was that Shilling's the only guy fired twice by Don Reagan. So that's when I decided that was enough. I'd sort of seen that, so I set up my own firm. And by golly, I haven't been fired by Don Reagan since. Now he's dead, so that isn't a likelihood anyway. But it's one of these things where you have to really look at it and look at the risks. And for some of us who are not hesitant to call them the way we see them and endure the slings and arrows of outrageous fortune, as they said in Hamlet, you got to ignore those risks or be in a position business-wise where they're not going to hurt you that much, or at least not permanently. Okay, excellent. Thank you once again, Gary. Happy New Year, and I appreciate your time. Okay. Yes. Thank you for following, and thank you for watching. Don't forget to follow Gary. Links down below.